Hello everyone, how's it going? So in this video, we're going to talk about Lucid Motors, trading under the ticker symbol LCID. Many people have said that it's probably going to be the next Tesla. Some also believe that it's going to be just like a giant bubble that's going to burst. But regardless, everyone would hope that this company is going to do well for their own pocket. So as one of the heavyweights in a burgeoning industry, Lucid is also one of the few companies that actually has a product. So as the time went on, the company's stock price, along with the investors' hype and what they were hoping for, went through some huge roller coasters. And till this day, some people are still wondering if this is a company that it's worth hopping on. So in today's video, we're going to take a look at Lucid and to see if the company still deserves to have a place in our portfolio. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. Before we begin today's video though, I'd just like to make a brief disclaimer about what my video is about and what it shouldn't be about. So this video is my opinion and my interpretation on how things are or should be. They're not investment advice and they should be watched for entertainment purposes only. They might be able to help you to make more educated decisions, but they're not used as the sole material for the decision making. Most of my analysis is done in the immediate past or just a few days before the uploading of the video. So sometimes maybe the chart no longer reflects what you see in the video, but it doesn't necessarily matter that much because it's what the momentum that matters, not exactly the specific levels. Also, the analysis tries to cover the stock as comprehensively as possible, so it's going to talk about more factors than just the latest news or the price actions. So for instance, we might talk about the company's financials, the stock market trends, the long-term perspectives, and the shareholder behaviors. So these are going to affect your decisions about if you want to buy the stock, for how long you want to buy the stock, and for how many shares you want to buy the stock for. Since most of my viewers would be watching these videos for the first time, it's important for them to consider all these factors. So with that being said, let's begin with today's topic. So Lucid went public back in the days in the height of the EV craze by reverse merging with the SPAC CCIV. The market was very exciting about the event indeed, and it would mark the beginning of a new era for many people who wanted to purchase an EV stock in early stages, and a significant EV stock in early stages. And back then, Tesla was making one historical high after another, and it seemed that no one can stop the bullish tendency. People were in the mindset believing that the bull market is never going to end. And it hasn't really changed for the past 15 years or so. The only true alternative for Tesla at that point was NIO, but investors were looking for a domestic alternative for better oversight and perceived safety regarding the investment. To be honest, they're kind of right, because what are the odds that Lucid is going to switch the exchange, right? Although Lucid was going public in 2020, it's a company with almost a decade of development at this point, and it was able to prove to the industry that it is here to stay. We got to remember that the market's mood at the time was euphoric, and there seems to be no obstacle ahead for us. The current price action acts both as a major cool down of the market and somewhat of an opportunity for those who want to invest in the long term. So over the past few days, I would say that the sell-off hasn't necessarily ended, because we previously have said that it's very important for Lucid's stock price to go back to the $10 price because it's very psychologically significant. This statement hasn't really changed so far. So we can't necessarily say that things have changed massively since then. If anything, they have somewhat stabilized around the $8 price, but this is far from been enough for us to get back in my humble opinion. So given that we are here as potential investors for the company in the long term, we do need to see whether Lucid has the capacity to climb back by itself above the level of 10. So the reason why $10 is significant in my book is because that's the price it went public with. Of course, the stock price fluctuated, but the point is it has always been above $10. And the fact that it's now dipping below 10 would highly suggest that, at some point, people are not really looking up for the company's future. And this is really why I would say that we need to consider the short-term price action for the entry purpose. Now, if we look at the long-term tendencies of Lucid's price action, it's very easy to spot that, the initial bubble that gave us so much hope has now bursted. The market doesn't want to follow the latest hype, and also because it cannot really afford it, right? Because there are so many cracks in the economy and in the fundamentals that the narrative will no longer be able to sustain itself. So we're talking about supply chain issues, flagship companies not so hot, the higher interest rates, the uncertainty in the economic outlook, so on and so forth. So with all these aspects in mind, and plus the fact that we have a war going on. So with all these going on, it's kind of hard to say that we have trust in the long-term prosperity of growth stocks. I'm not saying that they won't have any prosperity anymore. It's just that it's hard to sell this narrative at the moment. That's what it is. So the market has long predicted that there will be a bearish market after such a prolonged bull market. And by that, I mean by the end of 2019. This is what people were saying. So it's kind of, even without the whole lockdowns and everything, the economy has been expected to go into a bearish phase for a number of years, simply because the bullish one has been going on for so long. Plus, they might have run out of munitions to keep the bull market going, because the bull market has been going on with the paper money that central banks around the world have printed out, right? They didn't go into the real economy, otherwise we would have hyperinflation every place. But they have created a significant gain in value and a significant decrease in yields for financial instruments. And the same happened with growth stocks. Of course, growth stocks don't give dividends, right? But growth stocks can increase in share price, which has prompted a lot of investments to be pumped into them. For instance, pretty much the entirety of Silicon Valley or the tech companies sectors, they were fueling themselves based off the market share. Sorry, not the market share, the market cap, right? So in that sense, it made sense back then to put money into them. Now it's it's not that it no longer makes sense, but there are more options. This is why I would say that the long grind to lower prices is probably caused by the market trends themselves, rather than just the company's fundamentals. Although, even in that direction, things are not always great, right? We have seen that there are some complaints about Lucid Air's quality. But of course, those things are bound to happen from time to time. So I honestly don't think that this would be a huge matter if the economy has been going very well. So in that sense, things are not as alarming as they may seem. We should remember also that even if those grinds don't have a fundamental reasons per se, they may last a long while, and they're going to end up pushing the stock price to lower grounds. Nevertheless, for example, is it possible Lucid goes to $6 to $5? I would say so, because there's nothing that guarantees that this won't happen. You see what I'm saying? So this is why I would say that we need to see some confirmation that sell-offs have ended before we can put our money back. Of course, if the stock goes one day to $30, yeah, you would regret not buying in now. But what if it doesn't? So it happened once before. Soon after CCIV's private-public partnership, whatever, but basically they were saying for the private shareholders, they were going to take a larger share. That thing happened and caused the CCIV share price to go from $50 all the way down to 18, all the way down to almost 10 barely above 10, and then it went back to like $35, if my memory serves. Well, yeah, like I kind of regretted not buying more, but also without the benefit of hindsight, I wouldn't have bought more to begin with. You see what I mean? So we're kind of like in that kind of situation. And personally, I would have stayed with my current exposure, and maybe very slowly add to my position over time. But by that we mean add maybe another 25% or 50% to my exposure over like a period of 6 months. So when we look at Lucid's financials, we can see that the company's profitability needs to be improved. It is an encouraging sign that the company has been increasing significantly its revenue from Q2 of 2022 to like Q3 of 2022. They have more than doubled from 97 million to 195 millions. On the other hand, the cost of goods sold increased as well from 292 million to almost 500 million in Q3. So it's interesting to see that the cost of goods sold increased more slowly than the revenue. In other words, less than the revenue. So this kind of shows that yes, they're trying to control their expenses. Now, of course, there will be improvements to be made going ahead. Another element to observe is the operating expense. I think that these correspond to the fixed costs, and over the quarters, they haven't necessarily fluctuated significantly, which is a good sign for the company. But the company still stands to lose about $700 million in Q3 alone, which will definitely add up if we annualize like the quarterly losses from every single other quarter. Regarding cash, the cash reserves of Lucid is very impressive from the outside, but if we really think about it, since they have a deficit from their operations, like a net deficit from their operations, the fact that they have about $4 to $6 billion in cash reserves is like, it means less than what they truly have, because it is going to decrease over the quarters unless we see some significant scaling ups in the production in 2023, which they have announced that, apparently they're going to sell like 10 times more cars or whatnot. So we definitely hope and look forward to see that, because this would change like how the balance sheets look. In terms of liabilities, so their liabilities has gradually increased in size from below $2 billion to above $4 billion from Q2 to Q3. So liabilities provide financing to companies to keep operations going. They provide critical cash inflows when companies need funds to operate due to the cash flow cycles and other reasons. They differ from equity sales in the sense that there's no loss of the ownership, but there will be obligations to fulfill the cash outflows to both like interest expense and principal reimbursements. If the company doesn't comply, they would be considered insolvent, and then the company would be liquidated, our investment in shares along with it. So for the time being, I consider the increase in debt level to be normal. They seem to be justified by like the expansion of the operations. With that being said, it's something that we gotta keep an eye on in the future, because that might involve the going concern issues and the cash flow issues. Some additional relevant aspects concern the current ratio and the inventory turnover of Lucid. So the current ratio defines how liquid the assets are and how well they can meet short-term difficulties. This ratio number has been going down over time, suggesting that it's going to be short for cash or the equivalent assets in the subsequent periods. So we cannot rule out that they will not necessarily go out for additional like dilutions to the shareholders. The inventory turnover is a measure about how quickly they sell their products, in this case cars. The recent statistics would suggest that Lucid has no difficulty selling its vehicles, which is a testament to Lucid's brand recognition and reputation. and the pertinence of positioning itself at the high-end sector, given that people who have more disposable income tend to be a little bit like more recession-proof, if you know what I mean. Like they're not as sensitive to like the overall economy. Now, let's also take a look at the shareholder composition of Lucid, because that's definitely something important to determine if the company is better for trading or investing. Right now, above 70% of the company is in the hands of institutions. This means that the price volatility of Lucid will be lower than other growth stocks, mostly owned by retail traders. And the reason why that might be the case is just because, institutional shareholders, they have very diversified portfolios, so they don't mind the short-term volatilities. They also tend to stay in a stock for a longer period of time, which is definitely a very good sign for those who want to stay in the company for the long run. Regarding the short selling pressure, Lucid has a sizable short position, around 5.2 million shares, corresponding to 22% of the total volume. So I would say that this volume is significant, but it's not something that's going to justify like people coming in just for a short squeeze. Although, to be honest, if the stock price were to come back up, of course, a significant portion of the short positions are going to be compelled to close down their exposure and to redeem the shares, which acts as another buy for the market. So it's going to benefit for those who want to go long. I would say that this can be a secondary element to consider when you buy additional shares of Lucid. It makes a buy more compelling, but like I said before, the price action right now suggests that it's better to stand aside. So based on the analysis above, I would recommend to follow up closely on its price action and to slowly build up a position over the next 12 months in a dollar cost averaging kind of tactic. So essentially, I would say that as long as the price doesn't go back up to $10 in a sustained manner, we should stand aside and to wait for this day to occur. With that being said, does Lucid deserve to have a place in your portfolio? Yes, absolutely. The only thing that we're talking about here is how much we want to buy it for.